on what they would do with a share of a company's stock. This will be followed by exactly 10 minutes of question and answer with our judges. Once all the teams have finished, the judges will deliberate, and then we'll reconvene and announce the regional winner who will be advancing to tomorrow evening's global final for a chance to be crowned our 10th annual winner. I'd like to thank our sponsors for their contributions to the program this year. Kaplan Schweizer is our global platinum sponsor, TD Ameritrade Institutional as a gold sponsor, and Charles Schwab as a gold sponsor as well. Thank you so much for your contributions this year. A special thanks now go to our judges this evening. Thank you each for volunteering and taking the time to help evaluate the presentations. We appreciate your support of the Research Challenge. And our 4 judges this evening are Kevin Jin, CFA. Shepard Buckman, CFA. Philippe Maupas, CFA. And last but not least, Katrina McGinnis, CFA. Thank you. The teams presenting this evening in order are, from the Ukraine, Kiev National Economic University. From Austria, Vienna University of Economics and Business. From Russia, Higher School of Economics. From all the way in South Africa, University of Johannesburg. From Italy, Politecnico di Milano. And from Poland, Wrocław University of Economics. Welcome. Congratulations. So before I introduce the first team, audience members, turn off mobile devices, cell phones, anything that could cause a distraction to the stars of tonight's show, which are our students. Give them your undivided attention while they are up on stage, and we are filming, so keep the comments to a minimum, please. With that, I just want to congratulate all the teams, all 6 teams, for making it this far. It was quite a journey to get here, and I wish all of you the best of luck tonight. So at this time, I'm going to call the first team up to the stage, and the others can go into the waiting room until it's your turn to present. But please welcome to the stage Kiev National Economic University.
Dear ladies and gentlemen, thank you for attending our presentation. We are Kyiv National Economic University team representing CFA Society Ukraine. Let me start with a short introduction of our team. Nikolai, Olga, Vitaly, myself Evgenia, and our team leader Ivan.
We would like to present our investment report concerning Bayer. Bayer is a leading life sciences global player, providing clients with products in 3 fields: human health, crop protection, and advanced materials. Based on our research, we project target price to be 130 euros, with 1-year holding period return of 12%. Thus, we issue a buy recommendation. Let me continue with business description. Bayer produces both prescription and over-the-counter drugs, wide variety of crop protection substances, and high-tech polymers. The company used to be divided into 3 units: healthcare, crop science, and material science. However, in 2015, Bayer executed the IPO of material science, which is now called Covestro, and now group owns only 69% of it. In terms of revenue, healthcare contributes 49% of total sales, Covestro 26%, and crop science 25%. Bayer is present all over the world. The most lucrative regions for company are Europe and the United States, but Bayer has strong prospects in the emerging markets as well. As for its growth strategy, Bayer is hoping to reinforce its market position by efficient R&D allocation, new product innovations, strategic M&As, and exiting material science. All this provides an optimistic outlook for the future.
Pharmaceutical, agrochemical, and plastics. They grow fast and create room for companies' healthy expansion. Bayer Healthcare is the 11th largest pharmaceutical business in the world. It faces harsh competition from such industry leaders as Merck, Novartis, Roche, and AstraZeneca. Pharmaceutical market is the most competitive among all the markets Bayer operates in. Agrochemical industry comprises crop protection and nutrition chemicals. Within crop protection companies, Bayer is the second largest by sales. In terms of chemical industry, Covestro is engaged in manufacturing of polyurethanes, where the company is the industry leader, and polycarbonates, where it is the first runner-up. Bayer's strategy is to focus on its two life sciences units and move away from the third one. The company plans to do this via M&As and restructuring. R&D expenditures of pharmaceutical companies are predicted to grow at 2% annually by 2020. Bayer's R&D investments are predicted to grow at 7% CAGR, securing strong competitive position of the company within the industry. One of the most disruptive trends in pharmaceutical industry is personalized medicine. Under this approach, the prescription of medicines will be based on customizing treatment to patient's DNA and his medical history. Another dimension of personalized medicine is digital health. It allows doctors to watch patient's health condition and then adjust treatment according to his response to the medicine. Bayer's competitive positioning and market trends, which will definitely favor the company, are to strengthen our buy recommendation.
And now let me brief you in detail about our financial analysis. Over the last 3 years, Bayer has enjoyed a higher than average industry revenue CAGR of 5%. One of the reasons for that is the successful launch of over-the-counter drugs and drugs in cardiovascular sector. We believe that strong sales growth is sustainable. Bayer's profitability has shown strong historical performance, as its EBITDA margin increased to 24% in 2015, up from 21% in 2013. Investments in R&D have contributed to robust revenues, and proceeds from material science segment spin-off will be used to pay down long-term debt. This should reduce debt burden and lead to improvement in solvency ratios. Bayer's targeted dividend payout ratio is between 30 and 40% of core earnings. Yield amounts to 2%, and dividend payments have been stable throughout the last 4 years. Therefore, we believe that Bayer is able to maintain its sound financial position and to secure robust cash flows for its stakeholders. Building on this analysis, we will proceed with valuation to provide you with more information on how we arrived at our free cash flow forecast.
To derive a target share price for Bayer Group, we calculated its intrinsic value based on the DCF method. To better reflect a great variety of drivers and unique risks that Bayer faces among different industries, we prepared separate cash flow forecasts for its 3 major businesses. The forecast period for the largest segment, healthcare, was extended to 2030 in order to assume the cash flows not only from the existing drugs, but also from the drugs that are currently under development. Volumes of sales for healthcare were projected in line with 2 core determinants. Firstly, we estimated the growth of target middle-class consumers. The greatest potential here comes from the emerging markets in Asia, Africa, and Latin America. Secondly, we modeled life cycles of Bayer's bestseller products based on historical performance with similar drugs and that of competitors. Volumes of sales for Covestro and crop science were projected in line with consensus market growth forecast for each subsegment and every region where Bayer operates. North America will significantly drive the revenue from Covestro, owing to superior product technology and increasing demand for biopesticides. Returns from Covestro will increase in every region except Latin America, owing to low demand for plastics there. Profitability analysis indicates moderate increase in EBITDA margin for healthcare and crop science, since we believe the restructuring program to be successful due to the company's experience, massive investment, and strong competitive position of Bayer's products. Although Covestro is to face significant challenges in first year after IPO, we believe its EBITDA margin to grow significantly in 2016 due to decrease in prices for raw materials and phase out of old and large capacities of Covestro's main competitors. We believe the company's R&D expenditures to grow by more than 40%, and capital expenditures are predicted to grow by more than 8%. Based on CAPM for cost of equity and the company's bonds with A- rating for cost of debt, we calculated the company's cost of capital for 3 subsegments and used it to discount the derived cash flows. The major cash flow comes from the healthcare division, where 2/3 of R&D come from. Finally, by summing up equity values of each subsegment, we derived total Bayer Group equity value that is 108 billion euros and target share price of 130 euros. Our analysis demonstrated moderate sensitivity of the share price to changes in WACC or terminal growth rate.
Due to limited comparability between the guideline companies and Bayer, the market approach was mainly used for the reference purposes. Significant differences in the multiples occur because of lower debt-to-asset ratio and higher growth prospects. Thus, our target price is largely based on the DCF valuation.
Let me continue with risk assessment. In order to analyze Bayer's exposure to different risk factors, we created a risk matrix based on the survey we conducted among the industry experts. The matrix consists of the following categories: market, financial, operational, and legal risks. Shifts in regulation policy, the prime risk factor for Bayer. Approval authorities in the United States and Europe, such as Food and Drug Administration and the European Medicine Agency, are tightening their regulations, creating additional control and pricing pressure for a drug on its way to market launch. Drug development is quite complex and risky process. Products in pipeline may fail to enter the market at any stage of clinical trials, which may significantly impact Bayer's future revenues. Bayer's best-selling product, Xarelto, witnessed increasing competition from similar products, Plavix, Eliquis, and Adoxaban. These products show strong market performance and may potentially reduce Xarelto's market share by 2020. Taking into account all the risk factors with the corresponding probabilities of losses and gains, we received our worst and best case scenarios for our final target price of 130 euros. In order to confirm this price, we applied a Monte Carlo simulation. The calculation showed that our target price is close to the average values, which makes it highly credible.
The company's strong financials and attractive growth prospects are also strengthened by the pillars of business excellence, such as innovation-motivated management, diversified product portfolio, and worldwide brand recognition. All of this allows us to issue a buy recommendation. Thank you for your attention. If you would like us to elaborate at any point, please ask.